some examples about cash inflow. And here let's put cash outflow. Let's take this example of, let's say, paying salaries to employees. So paying, this is a cash outflow, so it will fall here. And now paying of salaries. Okay, paying of salaries. Of course, in cash. If you just accrue salaries, which means that they work for you but you didn't pay them, it's not going to be included as an outflow. What else would you think of a cash outflow? I think you would pay maybe accounts payable, paying of vendors, suppliers, paying suppliers in cash, included. You would also buy supplies in cash, buy inventory in cash. If you decided to buy on account, it's not included. Take care. Cash inflow. What would be cash inflow, which is operating activities? Could be like sales in cash, so cash sales. It could be collections of account receivable, right? However, if sales were on account, they wouldn't be included, by the way. You could think of some other examples to where cash inflows from operating and cash outflows of operating. These are just examples. If you paid rent, for example, if you paid any expense in cash, it would be regarded as cash outflow from operating activities. If you collected revenue, it would be regarded as cash inflow from operating activities. Speaking of investing activities, so the same thing applies. We mentioned that it is related to long-term investments and assets. So cash outflow would be here buying of long-term assets in cash. Buying of long-term assets. You know, if it is long-term assets, well, if it is on account, then it wouldn't be included. Investment, or let's say buying shares, or even bonds, shares or bonds of other companies, still included. Of other companies, that's very important, because if it is your company, it would be different. So on the other hand side, you will think of selling of long-term assets, right? And you would also regard selling of shares and bonds of other companies. So you've got them and now you're selling them. Selling of shares and bonds of other companies. So these are going to be included. Sorry, I have to return back here. Finally, financing activities. So cash inflow would be raising of capital. So the owners are paying. Raising of capital, they're buying shares in our company, or if it is a partnership, so they are paying capital. It could be also raising of loans or issuings of bonds. So in this case, banks are giving us loans. On the other hand side, we would be paying back loans and paying dividends. So paying dividends, we are paying something in relation to the capital which we got. So this would be financing activities. Also, redemption of bonds, or redemption means paying back, or paying back of loans, and this would also be regarded as a financing activity, but it is a cash outflow. There are some exceptions, though we're going to discuss it in a minute. So you recognize that if an item is related to an investing activity, such as, for example, buying of shares, and now when you sell those shares, it's still going to be related to investing activity, because it is an investing activity in the very first place. However, there are some exceptions. For example, if you buy if you buy some shares or bonds, those bonds here would be paying interest and those shares would be giving dividends to our company. So they should be included in the investing activities. This could happen, yes, but alternatively, we would recognize them as interest revenue and dividends received in within the operating activities. I'll tell you the reason in a while. The same thing applies here. If you got a loan, so you're paying back the loan, it's a financing activity. But what about interest? You're paying interest. So when you pay interest, it should be related to financing, but exceptionally, we would also put it here as interest expense in within the cash outflow from operating activities, exceptionally. Why did I put the interest revenue and the interest expense in within the operating activities exceptionally? Because when you're going to calculate your net income in the income statement, usually you would say revenue minus expenses. And within those revenues are the interest revenue, and within those expenses are the interest expense. So sometimes we would like to compare between the income, the net income on one side, and the cash flow generated from operating activities on the other side, and to see how close they are. So we're comparing, so we are trying to eliminate any items which could make a discrepancy. So since interest revenue is included into the revenues and the interest expense is included in within the expenses, so we would rather keep them also in the operating activities so that when we compare the two figures, we don't have a lot of items which are misplaced. So basically, we're just going to leave them as interest revenue and interest expenses, so related to the operating activities. However, paying of dividends or paying of dividends of our shares or redemption of bonds or paying back loans still is going to be financing activities. And also selling of shares of other companies will be regarded as an investing activity. So don't get mixed up by these two items, the interest revenue and the interest expense, and receiving of dividends from other companies.